If you're new and you've just taken one of our courses, welcome. My guarantee to you is you participate in these, the next 2 or 3 of them, you'll get these principles. You'll be able to apply this looking at your company, or for many of you, you might be looking at from a sales perspective. I want to understand my customer's company. Now, if you're new, you've never taken one of our programs, no worries. Hopefully we'll spark enough interest, one, that you'll use this tool to understand maybe your company, a customer's company, or maybe it's just something you want to know. You want to build this capability as you look at companies you may want to invest in, et cetera. Whether you come from a group that's been part of our programs or not, our hope is that you'll see the value in this. And hopefully you'll continue that desire to build your business acumen. And as Bailey described here, one of our goals at the end of this, we'll give you access to a self-paced online program. If you think this is interesting enough that you say, you know what, I want a deeper dive, I want to get a better understanding of these principles, we'll give you access to some resources, as well as how we could do this maybe with one of your organizations. So with that in mind, let me just ask this question. My polling is out, and we got to figure out what was going on this morning. Technology is always wonderful until it doesn't work. So we're going to do this old school in the chat box. The question, you come to this listening to an earnings call or how to listen to an earnings call webinar. My question is, when's the last time you listened to a call? If you've listened to one this year, just say this year. You know what, Brent, it's been a while. Or, you know what, Brent, I've never had a chance to listen to an earnings call. Just put that in the chat box. As you think about listening to either your company's earnings call, if you've listened to maybe a customer's earnings call, maybe even a competitor's earnings call, or maybe even looking at it from your own self perspective. Well, as we look at that, and you can kind of scroll through as you see the chat box here, and the first thing I recognize is that for some of it's been never. I got many never. Some of it's this year. These are what I call a hidden gem. There's information here. If you want to understand your business better, if you want to understand why your executives are doing what she or he are doing, why they're doing these things, it's a great place. If you want to understand how the market's seeing your company, if you're a publicly traded company, if you want to understand what's going on with a competitor or a customer, or again, if you want to understand a company you want to invest in, there's tremendous amount of information out there. So my goal today is give you a process, a simple framework, and some tools that will help you to listen to any company's earnings call and make sense of it. And more importantly, think about what I can do with this. What we do here at Acumen Learning is we work with 33 of the Fortune 50, many of the Fortune 500 companies, focused on helping their employees move from a functional expert who happens to know a little bit about their business to be a business expert who actually has an expertise in a certain function. Now think about that. We're all experts. You know more about your role than I'll ever understand about your role within your company. But we tend to kind of go through our careers with our kind of lenses on. We focus on I'm in HR, I'm in operations, I'm in finance and accounting, I'm in technology. What today and using these earnings calls is all about is stepping back for a moment, get the big picture. What is it our company's talking about? Do I know our strategy? Do I know the key metrics that they're driving for? Once you know those, then the third principle is absolutely vitally important, and that is being able to take that information and do something with it. Take the knowledge about the strategy and the key metrics and what can I do? What can my team do to impact it? And that's what the earnings calls will allow you to do. So really what earnings calls are hopefully trying to do is 2 big challenges every company focuses on. And let me share those in some statistics. Here's the statistics came out from Harvard Business Review suggesting that 95% of employees don't understand company strategy. Think about that. Now, your company may be much better. Maybe your leadership team, your CEO, she's coming to the table and she's sharing every day what's going on, or dashboards, or does a really good job of town hall meetings, etc. That being said, this is a fairly well-known statistic. The majority of employees, again, they understand their role and kind of their individual segment strategy, but I understand how it connects to the bigger picture. So the second challenge that companies face is this. Not only do 95% of their employees don't understand company strategy, but 90% of employees don't understand the key metrics and measures their company are using to assess their performance. As you think about metrics that you've heard, put them in the chat box. What are metrics you hear from your company leaders where you're kind of like, I don't know what that means. I haven't heard that before. For example, I'll give you a few. Return on invested capital, free cash flow, EBIT or EBITDA, gross profit versus net profit. These are all metrics or measures that companies are throwing out. Now, again, you may have some basic knowledge, you may have heard, but can you look at gross profit, for example, as Jay's talked about, or just the idea of how to think about where revenue grows and how do I figure out the percentage growth, et cetera, that Kelvin's sharing with us. That ability to kind of look at those and say, what are the levers I can push or pull? Well, that's what these tools are hopefully going to help you to do. On a quarterly basis, companies are required by law, if they're publicly traded, to submit to, here in North America, the Securities and Exchange Commission, but it's similar in other countries as well, on different exchanges, their financial performance. Now, the majority by far of those companies are not just going to submit a document to the SEC and say, okay, I'm done. They want to speak to it. They want to communicate what's going on. It's a chance for them to kind of share their marketing and their strategy, but also give a little bit more color on what's going on. So these earnings calls are a great way to understand your company, your customer's company, your competitors, or just any company you want to invest in. So imagine you're the CEO of Shopify, the company we're looking at. We've got Toby here, and Toby's last name is Lütke, the CEO, president and CEO of Shopify. Started in 2004. It's a Canadian company. You may or may not know that. Shopify is a leading provider of infrastructure for e-commerce. That ability to be able to create everything kind of soup to nuts to a retail provider to be able to access transactions with their customers. They got millions of merchants using their service. They're very well known. In fact, for me, before doing this research, I knew them as kind of a small business solution. But what you're finding is companies like Mattel, these large corporations are using their services. So it's kind of an interesting way to think about what they're doing. 197 billion, what they call gross merchandise volume. If they were generating 197 billion themselves, they would be one of the largest corporations in the world for sure. But this is actually how many transactions. So with all their millions of merchants, they've got $197 billion kind of going through their products or services. So a very well-known company, rapid growth, got a huge bump during COVID. And you're sitting there, you got rapid growth. You just did a major acquisition with a company called Deliver, with a unique spelling of Deliver, by the way. I'll show that in just a moment. But how do I get everything going in the right direction? How do we continue to be at the kind of the cutting edge of e-commerce? Well, that's the challenge that he's faced. And what is it that he wants, as you think about his business, what does he want his employees to understand? What is it he wants, his customers to understand or know? Of course, shareholders, those that have invested in Shopify. And then not only that, majority of their business is around these merchants, their partners. These are individuals. These are businesses that are coming to them and creating a partnership to provide a great product or service for their customers. What is it that he wants them to know? Well, that is what these earnings calls are all about, a chance to kind of communicate that. So here's my guarantee. Today, I'm going to walk you through a simple framework and a simple tool. And my guarantee, here at Acumen Learning, we've been in business for 21 years, and we teach purely this topic of business and financial acumen. Understand how your company makes money, and then helping you to make good business decisions based upon your functional expertise within that organization. But my guarantee, if you want to differentiate yourself, you want to build your credibility, you want to build your career and build your company, my guarantee, if you do this 2 to 3 quarters consecutively, and if you're a publicly traded company, that's where you'll have the greatest benefit, because you'll know more about your business than the majority of your colleagues, and sometimes even more than your managers will know about your business. If you're in a sales role, doing this with your customers, you will become that trusted partner where you not only understand your features, advantages, and benefits of your products, but you'll be able to help them make a business case internally to their business as to why a partnership with your business will drive their results. If you're in a strategy role and you want to see how we can differentiate ourselves, maybe in a marketing role compared to our competitors, this will give you that credibility and that ability to focus and understand those different businesses to build your credibility, your career, and your company. So that's my guarantee. So let's jump in. Let me start with the process. The process is just, you got to prepare for these. You got to analyze. I'll walk you through the tool to do that and how do you apply that. So let's jump in. Let's start with just quickly Business 101 or Earnings Calls 101. In the packet that we're going to give you at the end of this program, page 2 is where you get it. So don't feel like you have to take a bunch of notes or screenshots. This is getting recorded, so you'll have that available, but we'll also give you the tool itself. So let's just talk about Earnings Call 101. These happen on a quarterly basis. They're anywhere from about 45 minutes would be considered a short one, and upwards to kind of an hour and a half. Now, by far, the majority of them are somewhere in that about an hour time frame is where you'll see them. Now, every once in a while, they'll tie it with a big earnings call. My colleague last year did Walmart. It was their investor day. So it was not just an earnings call, but it was this significant, I think it was like 3 hours. I'm glad he took care of that one for us. Thank you, Kelvin. But these are prepared remarks and then as well as questions. So what are we talking about there? The first, usually in an hour presentation, the first about 30 minutes or so is going to be their executive team communicating to the market. They're going to talk about kind of how they performed last quarter, what worked, what didn't work, how they're adapting, what new products they're providing. Then at the end of that, they're going to say, well, let's talk about the future. What's happening in Q1, for example, in 2023? Or what do we see happening in our markets? Where do we see the business going? So it's kind of a look in the rearview mirror. How did we perform? What's going on? But then we start looking forward, where we headed. At the end of that, there's a Q&A. Now, this typically, I can only think of a few companies where they open up the Q&A to any investor. Tesla is one that's most well known for that. They give a chance for an individual investor to ask a question. The majority of it by far are going to be these large investment firms, the Wells Fargo's, the Barclays, not my company, but Barclay Bank. These big investment firms are getting a chance. They have an analyst who are tracking this company, and they're going to get a chance to ask clarifying questions. Now, their whole goal is to try and say what's really going on so that they can write a report that's either going to recommend, there's actually 5 different variations of what they recommend, but just briefly, they're going to recommend either to hold on to the stock, to sell it, or to potentially buy it. And there's variations within that. That's the whole goal of this. This is, again, where they're talking about key financial metrics. They're talking about key strategies, key products, etc. They happen on a quarterly basis. Typically, they get recorded. You can listen to them before, you can listen to them after they've been created. You can actually participate, register for the meeting, etc. And that's what that first section will walk you through. So in the prepare phase, there's 3 things you want to do to prepare for this call. Number 1, you got to locate the call or the transcript. So let me show you how to do that. I've got a web page up here, and let me get a clear web page. This wonderful website, we call it Google here. Any company you want to look at. Now, you can go to their website. You can go to investor relations and kind of navigate it that way. But the most easiest way is to jump in here and you just type in the company. So we want Shopify. And we want Q4. That was their most recent quarter. And it starts to guess. So you see there, I got Q4 earnings. Let's just try that one. I click there, and you're going to see all sorts of potential resources. Now, I typically like to go, if you've been on this call before, you know that I like to go to their investor page. That's where the most recent stuff is going to be. Now, there's a myriad of other potential companies. Motley Fool's very well known. Another one I like is called Seeking Alpha. You see it down here. These are third-party companies who access the information from their website and create a way for you to access and review it, etc. But I typically want to go to their website, so I click right here. It's going to take me in there. Oops, excuse me. That was the investor. Let's go to investors events. So right here, I click on it. It's showing me all events. So they just did the Morgan Stanley conference. They did a little webcast there where their president, Harley, and their CFO, Jeff, spoke at. Well, I'm looking for the earnings call. It's right here. Now here, if it's pre the call, if it's before the call, you actually can click on this and it'll ask you to register for the call. You register for it. It'll actually give you an invite on your calendar where you can then go attend the event. Again, now don't worry. They're not going to ask you questions. They don't even talk to you at all. They're talking to the market in general. If the call has already happened, they'll actually have the recording itself. Now here, they're asking me to register, and I already did this. I don't got time to do that. But if I register on that, you'd get the audio. It would actually give you the audio right there, the recording of it, and you're ready to go. So after the call itself, they will have a recording. You can do that after that experience. The other things I look for is after the call has happened, they have different resources. So here is the slide deck they went for. I love the slide decks. It's going to give you a nice overview of what are the key principles, maybe even the key metrics the company is talking about. And I'll show you how I use that in just a moment. The other things that I will look at is a press release. Now, a press release will give you another way to look at their kind of performance. Again, it's kind of a summary of some of their key ideas that they talked about in the call, et cetera, that you might want to look at. The other thing I like about it is towards the end, you'll actually get the financials. Now, you'll notice these are unaudited numbers. You see that up at the top. Eventually, they have to submit to the Security Exchange Commission their audited numbers. Now, if it just barely happened, a lot of times they haven't submitted yet. So if I want to just quickly see their numbers, I'll go to their press release and get access. The third thing I like to look for is a transcript. And if I go back to their website, they don't actually have the transcript available. So going to those third-party resources that I talked about, again, if you want to jot this one down or you can get it out of the recording, Seeking Alpha is a great one. I click on Seeking Alpha and I just type in the company, Shopify. It's actually shop as their ticker symbol. So I click right there. I come here and I see transcripts. So here's Shopify. You get a little, what's happened. This is kind of interesting. Look what's happened to their stock price. It was upward of $165 and it's now down to 43. We'll talk about why that is. But here, if I go to transcripts right here, here's the transcripts of that Morgan Stanley presentation. So I can listen to it on their website, or I can actually grab the transcript. Right here's the earnings call itself. It's word for word. Got too many things opening up here. Word for word, that's asking me to log in. Let me see. You get word for word the actual transcript. I'm not going to go through that, but if I click right there on the transcript, it would actually give me word for word what was communicated in the market. So it's a very great resource for anybody to kind of access. So that's the first step. You got to access the transcript, or if it's prior to the call, register for the call. Once you're done with that, the next step in the prepare phase before the call happens is to review your notes from past calls. Now, if this is the first time you've ever done it, you're not going to have the prior quarter information. You haven't written it down. You haven't gone through the process yet. That being said, you could do that same website and you could go back to a prior year and actually access what was going on. So if I wanted to see the Q3 numbers, I click right here, go to 2022, and I can just scroll through, and right here I got Q2 numbers, here's Q3 numbers. I could do a quick review if I wanted to prior to the call. But if you haven't done it, no worries. Go through this process, and at the end of doing this process in the next call, so Q1, you'll have what they talked about in Q4. The last recommendation I have as you prepare for these calls is to do it with somebody else, to do it with your team. If you're a manager, I can't think of a better thing to once a quarter to take 1 hour, review the call with your team, listen to the call together, and then use these tools to kind of say, okay, what are the nuggets? What are the 2 or 3 things we want to focus on based upon what we heard our executive team talk about? What are the 2 or 3 things we'll do this next quarter? It's a great way to do that. Now, if you're not a manager, just get with a colleague at work, or maybe it's a friend. If you're doing it personally, you want to look at a specific, you want to see what Tesla's doing. You're interested in knowing more about them. Get with a colleague and peer. It helps to build your understanding of what's going on in the call itself. So that's the prepare phase. Well, the heart of what I want to talk today is the portion of the tool that gets to analyze. Once you've kind of got access, you register for the call, you're ready to listen to it, how do I kind of capture information? The way I want to do it is I want to introduce a simple model. It's called the 5-driver business model. These are the fundamental drivers, whether you're a $5.6 billion revenue generating Shopify, or your small mom and pop shop. These are the 5 fundamental drivers every company focuses on. For those that have been through our program, let's kind of do a quick walkthrough. When we talk about cash, we talk about the importance of cash. Cash is blank, fill in the blank. As we talk about the importance of cash in a business, yeah, it's king, absolutely. King, royalty, queen, however you want to talk about it, it is vitally important. In fact, Ram Shriram suggests that cash is a company's oxygen supply. If a company runs out of cash, they die in business. So vitally important, yet most of us don't wake up in the morning and say, I hope I generate more cash today. We tend to say stuff like, I want to generate more revenue today. But the outcome of everything we do is it generates cash. Now, the foundation of that cash metric is going to be what we call the statement of cash flows. That's where you can see what's going on with a business around their cash, how much they generate, where they're deploying it, etc. You can see all that in the cash flow statement. Now, those have been through our course, you'll have some familiarity. If you haven't, at the end of this course, I'll give you a self-paced online. They'll walk you through these 3 statements, a simple way to think. It's absolutely valuable for you. So when we talk about cash, there's key metrics they look at, what's called cash and cash equivalent, or kind of your cash on hand, as well as how much cash you generate, cash flow. Whereas profitability, there's 2 levers in profitability, just by way of reminder, 2 things you can do to impact profitability. Anybody happen to remember what they are? You can increase one thing and or decrease another metric, and you'll increase profitability. What are those? It's like Dave's got the top one. When I increase our top line, it's also known as revenue or sales. I can grow my top line. Revenue, sales, and top line are all the same things. Now, the way I can grow that is I can sell more, or I can charge a higher price. That's what we're all dealing with. How many have felt the pressures around inflation? They're increasing pricing because guess what? Their costs are increasing. So that's, if I want to grow my revenue, if I've got a unique product, I charge a premium price. As costs start to creep up, I may have to increase my price because my ability to run profitably may be impacted by my personal costs. And you'll see that they did that with Shopify. They actually increased their price. And in fact, in the last 12 years, this is one of their first increases in price they talked about. The second is what others talk about, reducing our costs. That's the other lever. Now, this to me is what I call business 101. You want to know the fundamentals of business? This is absolutely. Guess what? These 2 levers actually impact cash, along with how you manage what they call working capital, right? Which is how quickly you collect on your receivables, how you're managing your inventory, and then what you're doing from how quickly you pay your customers. You want to pay slow, you want to collect faster, and you want to manage your inventory. Along with increasing revenue and reducing costs, that also impacts your cash. Assets is anything you own or control which has value. As you think about Shopify, what do you think their assets are? Put in the chat box. What do they own or control which has value? If I was to pull up their balance sheet, what would be those assets that they have? The application, the app itself, the apps that they have, intellectual property, absolutely, software, technology, servers, security, patents, all these things, as well as cash and buildings potentially as they think about their office space, etc. Well, how they manage their asset base and how financially strong are they? That's the asset, and the balance sheet is where you'd see how financially strong a company is. Growth is then what investors expect, and then people are what drive that. So with that simple framework in mind, if you come through our course, you'll see that as the foundation is how you think about a business, how you talk about a business, how you execute around a business. But it's absolutely a great model to use as you listen to these calls. So let me introduce you to one of the first tools we have that uses this 5 drivers as a way to make sense of these calls. The tool is called the Executive Alignment Activity or tool. Here's how it works. When you listen to these calls, you're going to get a lot of information coming out to you. Sometimes people describe it as I'm trying to take a drink out of a fire hose. We've all heard that expression, right? There's so much information. And honestly, in this call with Shopify, that was a tremendous amount. They've got a lot of different new technologies that they're providing, everything from the individual merchant all the way up to multi-billion-dollar Mattel. What are the products and services that they're providing to make that online experience even better for their customers? Well, how do I kind of capture that information? That's what this tool gets us. And when you get the tool, you want to think of this as kind of your strategy tool. How does it help you understand the strategy of the company? That's what this tool helps us to get to. So as you listen to this call, rather than having to try and capture a bunch of data, all I'm listening for are they talking about cash, profit, asset, growth, and people. And every time they talk about cash, I put a little slash mark. Every time they talk about profit, a little slash mark, assets, growth, and people. Well, over time, as you start to listen to what they're talking about, you're going to start to see an increase in number of slash marks. Now, if I actually have the transcript, I just mark it right on the transcript. At the end of that, you're going to then add up how many times did they talk about cash. Now, don't worry if you're saying to me, Brent, hey, look, this is all new to me. How do I know if they're talking about cash versus profit? Well, don't worry. In the tool, we give you a quick definition of what each of these drivers are, as well as some example terms. I call these trigger words. These are the words that you want to listen for. If I hear anything about stock buybacks, debt, dividends, or distributions, I'm going to mark a cash one for sure. If I hear stuff like profit, EBIT, EBITDA, or income, earnings, those are all going to be my profit levers. Once you're done with that kind of calculation, you get all these numbers, you answer 4 simple questions. The 4 questions are right here. Which driver seems to get the most attention? I love the second portion of it. Why? Why is this so important to them? What are the 2 or 3 main points the executive was trying to make? What are their goals, trends, objectives moving forward? And because it's an earnings call, I want to say, so what are the analysts asking? Where are they agreeing with them, or where they may be challenging the company? That helps me to see gaps in kind of what the company's saying versus what investors should expect. Now, at the end of that, you can also jump on real quick and kind of look at what happened to their stock price. I kind of shared that just a moment ago, and you saw kind of this swing around stock price. It looks like I've closed it there. But going to a website and just quickly, what's happened to their stock price? Why is it going down, etc.? That's how you use the tool. Now, with this and any executive communication, and by the way, it doesn't have to be an earnings call. It could be internally. You get a email from your CEO. She's communicating the latest and greatest about what's going on. Maybe you go to a town hall meeting. Any of those places are a great way to use this resource. So here's what I want to do. We've got about 30 minutes left. I want to try and use this a little bit. We don't have time to go through the whole call, but I want to use this with you. And the first thing I want to do is I've got 3 quotes. Again, to be honest, it was kind of interesting. Their CEO didn't talk much at all, to be honest. It was their president, Harley, who spent the majority of their time. Then their CFO, Jeff, spoke the rest of the time. So let's just look at, I've got a quote here. Let's practice using the tool. So here's a quote from their president, Harley, as he talked about 2022 experience. And here's what I want you to do. In the chat box, have it open. I want you to tell me which of the 5 drivers do you see as I go through this, okay? So the first sentence was this: 2022 marked another strong year for our merchant and Shopify, a year that reflects the resilience of our business model and commerce operating system. Which of the 5 drivers do you see spoken there? Now, interesting enough, it doesn't say revenue, doesn't say cash, doesn't say profit, assets, growth, and people. But what are you seeing in there? Well, you see stuff like, we're seeing a little bit of revenue. We had a great year. We can make assumption they had a good revenue there. We're seeing growth, definitely, a good year, a year that reflects the resilience of our resilience. Makes me wonder, well, is it going up or is it going down? Well, the next sentence gives you that clarity. So let's jump to the next sentence. What does he say? Our revenue grew 21% for the year, reaching $5.6 billion at the end, nearly $4 billion in top-line revenue since 2019. So basically, in 4 years, they've grown from about $1 billion to $5.6 billion. So absolutely, as soon as I hear revenue, I'm going to think profitability, growth for sure as well. Now, some of you may go into cash as you think about as revenue grows, assuming we collect that, eventually it can become cash. Now, guys, there's not an exact science, meaning if we were to go through the whole call, you and I, we would not get the exact same number of slash marks. But every year here at Acumen Learning, we'll do this about over 1,000, about 1,100 times a year. We'll do this type of activity. And invariably, the top 2 or 3 drivers will always rise to the top for everybody in the class. Even though they may not have the same numbers, the key drivers definitely stand out. Well, let's see what else it said. The growth rate we saw in 2022 is particularly noteworthy when you realize that this growth was on top of incredible 57% growth we saw in 2021 and 85% growth in 2020. Which of the 5 drivers you talk about? Yeah, you're starting to see a theme here, right? Shannon's kind of put in there growth. A lot about growth. Absolutely. Growth is a big deal for them right now. Against this backdrop, we continue to see data supporting the strength of entrepreneurship. Now, what is entrepreneurship? And how would you apply that in the 5 drivers? And new business startups. Yeah, people. In fact, even up here, I might even suggest back here, one of the big things they're talking about, how do they generate revenue? Shopify itself is generating revenue through merchants who are using their products. So the idea of new customers coming, no new companies starting is a big deal for them. So people did get a lot of time. Now, when we talk about people in the course, we're talking external customers, those that use your products or services, but we also talk internal. If you listen to Shopify's call, it was a lot about their external customers, their shareholders, their merchants, new companies coming out, starting to use their products were a big part of what they talked about. That's how it works, guys. So let's do another one. This one I'm not going to read. I'm going to give you a chance to read. Here's their CFO, Jeff, talking about Hoffmeister, talking about their company. Which of the 5 drivers? Just start, as you read through, just type in the chat box. What are you seeing there? So we're seeing growth. Yeah. I mean, when it says growth, that's pretty easy. Grew, increase, even decrease is considered growth, downward growth. Yeah, as well as profitability, right? Revenue growth. Now, again, this is a tough one. Sometimes we look at revenue and we jump to cash, but remember, revenue is driving your profitability. The outcome of good profitability is it generates cash. In the end, it doesn't matter if you put it as cash, but yeah, definitely you're starting to see a theme. Great question. So GMV, what is that growth? That's gross merchandise volume is what they're in dollar amount. So what this is talking about is how much dollars went through their system with their merchants. So definitely it drives growth for sure. Brenda, but you're also looking at its revenue for the company, because then they take a portion of that revenue for Shopify's benefit, right? So it's a huge volume of how much capacity is going through their system in dollar amounts, but it also impacts their profitability as well. So David's kind of saying, I'm not seeing profit. Here's where I would see profit, David. Revenue. The moment I hear revenue, there's 2 lines. Remember, I can increase revenue or I can reduce my cost. So I hear anything about revenue, I'm thinking profitability. Now, again, revenue also impacts cash, but I definitely think profitability there. Revenue was 1.3 billion. So these revenue ones are the ones that come up. But yes, most of the conversation is on growth for sure. Well, not only do they have their internal team communicating those numbers, but they also have the analysts asking questions. So this was Keith Weiss from Morgan Stanley. What is he talking about? So you kind of get what the strategy of the company from Harley and Jeff, and now you see the analysts coming in. What do you notice? What are they focusing on here? Which drivers are you seeing there? Yes, on that question on the GMV process payments, yes, profit and growth, as well as it drives cash as well. Yes, so profitability, yeah, it's right there. So profit for sure. Where does this one go in? Efficiencies. Where would you put that? Now, of course, efficiencies can drive profitability, can they not? You know, the more efficient we are in our business, lowering costs, that's going to have a positive impact. You also think of it from an asset perspective. If you've been through our class, we talk about asset strength versus asset utilization. If you can make a process more efficient, more effective, saving time, reducing costs, producing more, those all end up, the outcome is driving more profitability and cash, but it's also how well are you utilizing your assets for sure. Yeah, nice profitability. One of the big questions they're talking about, Shopify's talked about becoming more efficient and getting better at their profitability. But what he's saying is yeah, you're getting some growth in revenue, but what's really going on from a profitability perspective? Are you really getting more profitable? And in a moment, I'll show you their numbers. They had a huge drop in their profitability. So there's a bit of an analyst saying, look, yeah, you're talking about the top line, you're talking about all the growth and new customers, but when are we going to start seeing it become more and more profitable? So it's a little bit of a pushback. I thought it was interesting in the call. Well, folks, we could take all day going through this and reading through it, and it's pretty easy to do. Now, again, don't get caught up in an exact science. If you're doing with a colleague and they look at this efficiency and they say that's all profit, and you say, well, wait, no, that's how well they use their assets. It's efficient. Don't get caught up in it. What you'll find, again, is you keep going through, you and your colleague will get the top 2 or 3 will be the same. Maybe not in the exact same order, but definitely you'll get clarity on where their biggest focus is. Let's see. So costs increase faster than revenue. Great question, David. Yeah, you would expect that, right? If my top line revenue is growing, but my bottom line profitability is not, then my costs are increasing. Well, what's interesting is there's some unique, definitely they have cost increase. Absolutely. The acquisition of Deliver, they've got, duplication of effort, right? Deliver had their HR, they had finance, they had accounting, but so does Shopify. You have to integrate. So you're always going to have a little bit of increased costs there. But on top of that, they did a big pay increase. As market conditions suggest that they were underpaying, they looked to increase their pay. So they had a company-wide change in compensation. So a number of factors that impacted it, and we'll talk about that. But good insight, Dave. Absolutely. Costs increase faster than revenue, and that's why their profitability isn't there. Well, folks, I went through, did it. So I did the work for you. Of course, my goal is don't just keep coming to these and say, hey, it's great. Brent does the analysis for me. Your greatest benefit is for you to go do this. As you do 2 to 3, it'll become very easy, especially if it's your company or a company you work a lot with. You'll quickly see the themes, the ideas, and you'll notice the 2 drivers that I saw focused on the most were growth, for sure, by far, big one. And we saw that in yours. Just scroll up through the chat box. You'll see how many times people said growth. Then the other one was people. Now, there was a decent amount on both profit and assets as well. Not very much on cash. But this was a big one. So the question then comes into, so why would they focus on that driver? So before I give you my answers, think about it. Shopify, I showed you their trend. They were 164. They're down to 46. Why would they be talking about growth, do you think, in this call? You put the CEO hat on. Why would you want to communicate something around growth? This would be the participation of our experience. My Idaho version of participate. Why would they focus so much on growth? Profitability's down. Stock price is down. Yeah, so focus on strength, not weakness. So that idea of there's a bit of a marketing piece. We want to spend a ton of time. Like their net profit's a negative $3 billion. People don't like to see that. Focus on strength, not weakness. This is the way to survive. Yeah, we got to grow. So people will invest. Of course, investors want to see it. Absolutely. These are all great reasons why they want to talk about. In the end, you're exactly spot on. So let me kind of share. Here's what I've kind of got here. Growth was it. So here's a couple of statements of what they're talking about. Top line revenue. Our revenue grew 21% for the year, reaching $5.6 billion. That was a big conversation for them. Sorry about that. I was trying to move something and I ended up writing on the screen there. So top line growth, huge growth there. The growth rate we saw in 20 is particularly important. This whole idea of, remember, their 21% is on top of 57% the prior year, on top of 85%. This is what we call rapid growth right here, okay? The idea of where they're seeing growth, 10% of all e-commerce in the United States is on Shopify platform. You may or may not have known that. Their total dollar of gross merchandise volume, $197 billion of transactions going through their technologies. 3 times growth in the last few. Best Black Friday performance ever. And in fact, here's some of the data. Year-over-year growth there, and 10% of the of U.S. market. Millions of merchants, 175 countries. So it's a global presence. Is a big statement. Their big Black Friday was huge growth for them year over year. Just in Q4 alone, they had 13% growth from Q4. Now, of course, Q4 is going to be a big month for all retail organizations. So huge growth there. A 13% growth year over year. One of the things is when they talk constant currency, what are they talking about there? Remember, it's a Canadian company, but it's traded on a U.S. exchange, so everything's in U.S. dollars. As the U.S. dollar increases, it's going to have a negative impact on the Canadian dollar or international currencies. As the U.S. dollar improves, it's going to impact those numbers a little bit there. So big performance there. $1.7 billion in revenue growth from kind of year over year comparisons. So significant metrics all across from a growth perspective. Volume, those GMVs, processed shopping payments. This is just in Q4 alone, $34.2 billion. That shows you how big Q4 was for them, a big number for them. The big thing is they're in an investment phase. They're spending a lot of money on new products and services. They have a whole enterprise-wide. This is why Mattel and others are going. So you got all these numbers going down. We want to speak to, yeah, we got all these growth, but in the end, there's a bit of the profitability they didn't really take a lot of time to talk about. I'll show you later why that became an issue for them. But really trying to speak to the strengths versus their weaknesses, as David kind of described. And there's some reality. They're in a rapid growth mode, but this is also an industry that got a real big bump during COVID, right? Think about all the merchandising that went online. And now all of a sudden you're coming out of COVID. How do we play in the next version or the new kind of economy that we're dealing with? But growth absolutely was a big focus of what they wanted to talk about. So what were the 2 or 3 main points the executive were trying to make? Well, a great performance in the year, particularly on that top line, as well as this resilience. I think that starts to get into well, wait a second, why is your profitability not there? And I'll show you some things in just a moment. They highlighted these 3 investment themes: build relationships with buyers. So how can they make those connections? So everything from being able to do transactions in social media. So we're all familiar with like Facebook Market. Pinterest has some of that, but they just added, oh my goodness, Twitter. You can now transact through Twitter. So they're trying to figure out, where do people buy things? So they're adding new products there. Obviously, point of sale stuff as people start to come back to brick and mortar. They have all sorts of products that are offline products, a point of sale system. Many of us are seeing these. You know how you may go into a gas station or in some businesses where you can actually check yourself out. We see that in the big retails like the Walmarts of the world, but you're starting to see it in small players where you can actually walk in and do your transactions on your own. So these kind of point of sale standalone systems. So what they're trying to say is, how can I help my merchants? Everybody who's using Shopify transact with their customers and figure out all sorts of ways to transact with them. A big part of their emphasis is providing international. How can I transact over borders? How can I deal with all the regulatory requirements of selling things across borders? So that's a big emphasis of what they're looking at. First sell to full scale. That's a key phrase. Basically, how quickly can I get a new customer to be able to do their first sale to have a fully running online presence, and how quickly they can do that. That was a big part of their message. And then, of course, the growth that they're having and the benefits to customer. That's why growth and people were such a big focus for them. So where do they, some of the highlights there, products and enhancements, Shopify audience. This is where they target specific audience for their merchants to go after. So they can actually get digital or targeted marketing to their customers. Shopify Collabs is a resource that they've added. Point of sale and goal, that's that kind of standalone. They don't need somebody to transact. Think of it kind of like at your Walmart where you can do a self-checkout. It's the same concept, but it's through other types of retail stores. You go into clothing stores, you can do it. Maybe in a gas station, you can do it. Tap to pay resources, Twitter shopping, YouTube shopping. This is all about how to build relationships with the buyers. Where can I understand my customer better and transact better with them? Selling internationally, really looking at this market pro allows them to go across borders, dealing with customs, dealing with all the fees that may come. How do I sell things across borders? And they're able to sell into 200 countries. I think there's only recognized countries like 260, 270 countries, if I remember right. If I'm wrong, correct me in the chat box there. And then first sell to a full scale is a big focus in different ways that they help. Shopify Capital, where you can actually get loans to set up what you're trying to do. So I'm seeing the chat box here. I'll review that, see if there's anything else I'm missing there. So that was kind of the top 3 focus areas. Well, where do they see it going? In short, 2023 will not slow down. We are committed to simplify commerce even further this year as we innovate and invest in future-proof our merchants' businesses and allow them to extract greater value from Shopify. Shopify, this whole thing is simplify. Shopify and simplify, it's shopping made easy. That's where the Shopify kind of name comes together. But it's how easy is it to transact? You think about today, I mean, how many, this will be interesting. I wish I had a poll question. How many of you, majority of your transactions, you go through a retail store, is just that tap and pay with an electronic device, not the credit card? A lot of us do that. How many are just using it with like your Apple, on your watch or your phone? Things are changing. Like I got family members who they don't really carry credit cards. They walk in with their cell phone and they can pay right then. I love anybody. Give me, how many of you are actually just doing it electronically with a cell phone or other kind of electronic versus actually using a credit card? We're starting to see that, but that's simple. That's Shopify's. Where can I transact with my customer and make it easy for people to pay? 3 investment themes, again, was a big focus. Other ways in which this is their drive. You want to know the key themes of what they're focused on, what they did with them last year, but what they're planning on doing with them this year. That was a key theme of kind of their objectives. And then the last part was this a little bit on headwinds and guidance. So let's talk about that. The headwinds and guidance was their earnings calls. The idea of earnings. They had a huge increase in their compensation. That impacted. So as I think it was, can't remember. I think it was David talked about, their costs were outpacing their revenue, which is absolutely true. Well, the big part of that was they increased what they're compensating for their employees, which is a positive, right? To retain their employees. But they have done a bunch of growth in fulfillment networks. So this Lever is a company they acquired that is basically a shipping company for e-commerce. So think about how Amazon has all these warehouses and this huge infrastructure. Well, Shopify partnered with a way in which a merchant can actually have that resource available to them and a fulfillment, which allows them to get better at predicting. Rather than you individually in your garage packaging things up, you can work through Shopify Fulfillment Network, which Lever was a big acquisition, that is $2.1 billion acquisition they did. And that's a huge impact, but that had impact to their profitability. So increase the cost there as they integrate those companies together. The last thing that so where do they see what's going to happen in the future? A big emphasis on revenue growth, but not only that, getting better profitability metrics that they're looking at. How can they kind of build out the profitability side? In a moment, I'll show you some numbers as we get into the number crunching here shortly. So overall, what did the analysts ask? What were their questions? It was all about profitability, pricing, increase, and efficiencies. As I'll show you in a moment, their profit was down tremendously. And it's like, okay, guys, we see that your profit's down. What are you doing about it? So that was a big question. And here's where it looks. Here's where the numbers. So again, if you want to look at that profitability, you want to look at that income statement, you'll see nice growth in their top line. We love that. But look at this bottom line. Look at that. $2.9 billion profitability here and a huge loss this year. Now, if you look at it and you run some numbers, you'll see that gross margin, they were up a little bit, but they have some increased costs for their direct costs. The other costs that went up, you'll see some research and development costs, sales costs went up. Now, that's just normal operation, growth, integration of Lever. The big thing that impacted them was this number right here. They acquired, if you want more detail, check with me at the end. I'm happy to spend more time on this. They partnered with a company called The Firm. They're the companies, when you go and do a transaction online, many of you are familiar with this, where you can, rather than pay in full right there, you can pay in 4 payments at 0 interest. If you know about this, give me a thumbs up or say yes, you know, in the chat box there. Our thumbs ups aren't available right now. How does that get transacted? Well, this Affirm company partners with both Amazon and Shopify, and basically they handle that. And what they're doing is it's kind of trying to displace credit cards. So you transact, as long as you pay in those 4 payments, it's great. Well, if you don't pay in those 4 payments, they're going to charge you anywhere from like 12% all the way up to 30% interest on that transaction. Well, their investment in that was huge. But since coming out of COVID, the value of that investment, they did an IPO. Their IPO was at $117 a share. It's now at $9.90. Well, Shopify was a big investor. So they actually had a loss in the value of that equity investment they made, a $2.9 billion write down. So in the end, there's no cash that left their pocket, but that's why their numbers are so far off. So they'll adjust out stuff like this, and they'll show you an adjusted number, but their actual GAAP numbers aren't very strong. That's why analysts were asking the question. So we can talk more about that if you have questions later here. But let's talk about the vectors of growth. Those 3 areas they talked about was a big question. What's going on? Deliver and integration. And that is the correct spelling of deliver. And then kind of where do you head for 2023 guidance? Well, folks, that is what's going on. So what do I know now? Where am I at? I understand they have a great year top line. They're growing like crazy. They're providing all sorts of products, a lot of investment in those products, but profitability is tough right now. One of them's kind of this one-off write-down they had to do, but their costs are increasing. So how is that going to play out in the future? That's a big question to look at, and that's what I would be looking at Q1. So let me jump to the second tool. The second tool is called the Navigating Financial. With this tool and any financial information a company might have, you can do that assessment. So here's how it works. You'll notice what I love about this tool. On the left-hand side, you have the 5 drivers. And then you have key metrics companies focus on. Now, these are key metrics that most companies will focus on. If you want to look at Shopify, you're going to see that they have some unique ones. They have, gross merchandise value, GMV. That might be something that you would want to track for them. But these are the common metrics that most companies focus on. So let me explain how it works. You come in, you look at their financial numbers, and you want to find what's going on in their cash. Well, there's 2 metrics companies typically focus on. What I love about this, it tells you what line items should you be looking for, but not only that, where do I go to find it? So if I want to figure out how much cash they had on hand at the end of 2022, I would come to the balance sheet. Now, you don't have it in front of you, but I have it right here. So here's the balance sheet. For those that have been in my class, you'll notice that, you'll remember that on a balance sheet, the financial numbers are listed by most liquid at the top, down to least liquid at the bottom. So, of course, the most liquid is going to be actual cash. So there's their number, 1649. I put that in there, $1,649,000,000. That's how much cash. Now, if I want to see what happened, you'll notice they had to dip into that. Remember, 2022, they had some big investments they made. So they had to dip into their savings account to access some of that cash. Now, if you had more time, you can look at that in greater detail. But the next one I want to look at is going to be their cash from operations. And as I look at that, I'm going to jump right here. The 9 I'm going to look at is cash from operation. What statement do I want to look at? Right there. It's the cash flow statement. So I jump to that cash flow statement, and there's a number of cash flow numbers. If we had more time, or if you want to do our online learning, you can get, what is this? Net cash provided operating activity. This is the most important line item. Now, for those who have been in my class, do you want that positive or do you want that negative? This number right here. Anybody remember? The cash they generated from their core company. Do you want that positive or negative? Of $5.6 billion. When they net it all out, they generated a decrease in their cash. They overspent by 136. What do you want, that positive or negative? Every month, every quarter, every year, that's what you want to see. Absolutely positive. So this is not a good sign for them. Now, of course, they had a rapid growth, a lot of investments that are impacting these numbers. But in the end, I would want to see that getting positive as quickly as I could. Well, that's the number, $134 million decrease in their cash. So when they run their whole business, they overspent by $134 million. Well, the next one I want to look at is my profitability. I go to that P&L. Here's my profitability number. I just pull it over. 5,600,000,000. I do the same thing on my net income, this huge loss. If I had more time, I'd say, okay, what was that again? Oh, yeah, that was the write-down of Affirm, the partnership that they had. Big impact to their numbers. By the way, when does that impact? When does that hurt them? It's when they sell it. For now, they're fine. It's if they try and sell it, it becomes an issue. Well, then you can go ahead and calculate the return on asset. I calculate the profit margin. And what I'm going to see, it's a bad number, negative. What that says, for every $100 they brought into the company, they generated a loss of $61.80. Now, you look at that and you can say, okay, that is a bad number. Now, when do you want to buy a stock? When it's at its peak or when it's at its bottom? They're at $46 a share, I think is what I looked at today. They've been as high as 165. The question really is this just part of their growth cycle? As they're coming out of COVID, that bunch of investment, a few write-downs, is that what's causing that? You might even go back and net out that one-time write-down and do it off an adjusted number, and you might see a positive number. But in the end, these numbers, although they look bad, it's more of one-off type things. And to be honest, that big impairment, that write-down was non-cash. It actually they did not write a check for $3 billion. It was just the value of that investment. Now, if that value returns, they're going to see huge growth in those numbers. So in the end, yeah, the numbers aren't good, but let's look at them compared to last year, see what we see. And you'll see big swings, which again, to me, suggest a bit of, this is a bit of a one-off kind of transaction. Here's where they were on a growth trajectory, one-off because of an investment they've done, plus some increase in costs. That's why they're there. My guess is as they come out of it, you're going to see improvement in these numbers. So looking at a year-over-year comparison is a great way to see what's going on year-over-year. You could do it quarter-over-quarter. You can also look at them and compare to competitors. Here's Wix. So this is Wix, which also does the same type of work, provides that back-end e-commerce resources, as well as some other things. You'll see how they are volume-wise, revenue-wise versus Wix. You can see their numbers. They also had some poor numbers. You can look at what's going on that. I cannot hear. Are you hearing okay? Okay. Sorry, Amy, it may be on your side. It sounds like we're good on hearing. Okay, and then, or you can do it to any company. Those who were with my colleague Kelvin last month. You would look at Starbucks, obviously very different industries, but you can kind of see those numbers in comparison. Well, folks, that is the financial tool. Now that you've done the analysis, the last step is to apply. And probably the most important thing, we have a chance to work with 33 of the Fortune 50 in our career here in the last 20 years. And these are the types of outcomes companies get from taking this information and doing something with it. They improve their performance of your business and function. You'll increase your collaboration. 77% found that they improved upward communication, improved employee engagement. These are all things that we want to strive for in our businesses, are they not? 75% increase in business focus, improve your teamwork. That's what this analysis allows you to do. So in the end, if you do the analysis, the next step is do something with it. So here's how the last part of the tool is to actually go through that. There's three things you do. You say, what were the key insights? For me, profitability and lack of clarity. They didn't talk much about that. It was almost like they sidestepped the whole thing around profitability. As an investor, I would be a little nervous about that, but they then come back in other ways and talk about how they're looking to improve that. Significant e-commerce player. I didn't know that. I knew they played a small to medium business. I did not know how big they're getting beyond the small to medium business. And I'm married to a Canadian. I love Canadians, and I did not know they were a Canadian company. That was also interesting to me, as well as Wix is as well. Kind of interesting. Well, from there, what would I do with that? The next part of the tool tells you, what am I going to do? The three things I want to do. Number one, I want to compare theirs to peers. I want to look at Wix and others, see how they're doing within their industry. Share this information and my findings with the consultants and clients. I'm a consultant. We work with many companies. How is Shopify impacting your industries? And then I'd love to work with Shopify. So if you're with Shopify, we'd love to come and talk with you and be helpful in that resource. Well, folks, that is the tool. The last part of it is to take your analysis, have a conversation. If you're looking at your own company, have a conversation with your manager. If you're looking at a competitor or customer, talk to your marketing team. Help them see how we can differentiate ourselves. If you want to look at kind of a benchmark and how we can be a better player as well, you can look with your manager and have that conversation. Well, folks, that is the tool. I know we're at our time, so let me just wrap up by saying, remember, our second step of prepare was to review our notes. Once you've done this once, you'll have those notes to go back and say what happened in Q4 versus what happens in Q1. So my question to you, put in the chat box, who are you going to analyze? Are you going to look at a company you want to work for, so a company you want to sell to, compete against, partner with, invest in, interested in, or you know what? Next month, we're going to look at Microsoft. Put in the chat box who you want to look at. As we wrap up today, here's the tool. Go to acumenlearning.com/webinar. Bailey will put in the chat box. You can access it. On the 26th, we'll be looking at Microsoft, technology company, and what's going on with tech. We're hearing a lot what's going on there. Now, if you find this interesting, you say, you know what, I want to use this. Absolutely. Take the tool, go review your customers. We can do this for your company. If you're interested, reach out to us. If you want kind of a self-learning, go to that website and you'll be able to access $100 off our online program. It's 13 modules that will cover the 5 drivers plus the 3 financials, help you differentiate yourself in this organization. Folks, I really appreciate your time. Sorry for going over a minute or two. Thank you very much for your time. Please continue to engage around this. Most importantly, do it for your company, do it for your customers, do it for a company you're invested in. Let's build our business acumen. Thank you very much and have a great day. Are there any questions, Bailey, or anybody else that we missed throughout? I tried to catch them as we were going. Looks like we're good on the questions there. Very interesting company. It'll be interesting to see how they do in Q1. Thank you, David, for your participation. Enoch, good to have you there. Cora, Irina, thank you very much. Oh, thank you, Bailey. You're so kind. Folks, feel free to invite others. By the way, this is not just if you participate in our program. So if you've participated in our program, you like it, bring colleagues. It's a great way to build their capability. The more of your employees who understand what you're trying to do and then how they can impact it, that's a huge differentiator for your organization. So please join us if you can.